Hi, everyone, and welcome back to my segment of StockCharts TV, Mish's Market Minute. I am your host, Mish Schneider, and once again, we have an action-packed session with lots to look at. We're going to keep it all. Last week, we covered alcohol and cannabis stocks. And when I say alcohol, we looked at distillers and we looked at some of the beer companies. Samuel Adams, Sam did very, very well. Budweiser is actually starting to break out as of this week. So I thought, and by the way, also Grow Generation was another one I gave you in the cannabis space, and that also has done very well. And this is in the face of an actual market correction. So I had a feeling that we might be looking at some of this stuff, some of the feel-good stuff. So this time, we're going to look at the legal drugs. This is in the biotech space. And I thought it was interesting is because we have two different headlines here. We have the headlines of Trump saying that he vows as a campaign promise to lower drug costs. Well, of course, we've heard that tune before, number one. And number two is we know how strong the lobbying groups are for biotechnology. But however, we'll look at each one of these, and many of them are still looking very strong. What we're going to do is we're going to weed out some of the best ones, and we're going to start with something that I covered with you a couple of months ago, which was the new issue stocks, many of which were in the biotech space. And then we're going to go to the oldies. And then one thing I don't have here is what I'm going to show you now is from there, we're going to go into the vaccine hopefuls. These are the ones that are working on some kind of a COVID vaccine. Okay, so now what we're going to do is go right to the StockCharts charts where we can look at our ACP plugins, all of which are getting ready to be released, which I think is going to be extremely wonderful. Okay, so let's start with IBB, which is the BioTech ETF. And this is part of my economic modern family for a reason. It's a very highly speculated area, number one. And number two, it actually is both a cyclical and non-cyclical in terms of the US economy. Cyclical in that when the economy is doing well, these drug companies have more money for research and development, and they also hire more people. Non-cyclical is what we're seeing right here during the COVID time, in that regardless, there are always R&D being developed for new drugs, whether it be for cancer or what have you, and also right now, of course, for a rush to the vaccine, as I just said. So what's interesting about IBB was back in 2015, this actually made a new all-time high and did nothing up until this year, when it made a big breakout and got up to about a high of around 146. And since then has been holding the 200-day moving average and consolidating, because it really broke out over 126. If we can look here and I can draw a line, which I'm not going to, I'm just going to show you with the mouse here. You can see at around 125, 126 was the big breakout area. So all we did recently was retrace to the breakout area. Now the question is, of course, what the overall market does, how this is going to be impacted. And a lot of the stocks we're going to cover in its basket we're going to look at today, so that will help too. And right now, as of Thursday's close, this closed right underneath a 50-day moving average, going into an unconfirmed caution phase. And by now, you all should know who've listened to me from week to week that unconfirmed means that we would need a second day to close below. And if that's the case, then we'll go back to looking at 126. Otherwise, if we can get a close back over that 50-day moving average, which you can see right here comes in at 135.65, right underneath it, then I think we'll start to see a little bit more of a rally. And of course, I always like to show you our other indicators. It's well outperforming the SPY. In real motion, look at the divergence here. It is underneath both the 200 and the 50. So this is showing a little bit of pressure here and would give me a little bit of pause in terms of the overall ETF that we could potentially see that caution phase confirm and the move down. So we'll be keeping an eye on that. And of course, volume patterns are showing basically it's sitting right on the average. Now, if we go to the next symbol, which is another ETF, but I want to show it because some people don't look at IBB, they look at XBI. And this looks a little bit different, so it has some different stuff in its basket. So this also, though, had a kind of a similar situation in that it had the big breakout in 2020 once it took out all of this, which is really at around 100, and even though we've tested it a couple of times, it's really kind of holding around that 100. So that's a good thing. But this did not close in a caution phase. In fact, it had an inside day on Thursday and closed above the 50-day moving average. So this might be the better opportunity. Plus, look how well it's outperforming the SPY. And in the real motion indicator, it's above the 200. It's slightly below the 50. So we're still seeing a divergence, but not nearly as severe as the one that we just saw with IBB. So I just wanted to give you the general sector look. And now, of course, we can start taking a look at some of the individual stocks. So we're going to start with some of these new issues that I talked about with you. As I said, if you look back a while ago, some of which have just exploded. One is Beam Therapeutics. And what I did not do is I did not go and see what each company specializes in unless I happen to know like a Moderna type of stuff. So I don't know if this has gone up because of any kind of cancer research or what have you. But what's interesting to me is when we did this, this is a new issue because this hasn't been out very long. This is why it says not enough data to commute a moving average. We have a 10 and we have a 50. We don't have a 200. And what you can see here is that it's above both. It's outperforming the SPY. And of course, we don't have a real motion indicator here, but we're seeing it's doing well on volume. What's interesting to me is that we're right here close to the resistance at the most recent high and the all-time high, which is just over 30, about 31. We got there on Thursday, and now we closed with an interesting type of candle. This is called an inverted hammer doji candle, which often means that there was some forced selling that was coming into the market. And this was up on the day initially and wound up closing down a little bit on the day. Perhaps that has something to do with the divergence that we just saw in the real motion in the ETF. We don't know. But nonetheless, I think this is interesting on a dip. If we can get any kind of dip down to around 26, 27, then you have a good risk of a couple of dollars. And of course, if it can take out the all-time high, then I think you might be looking at a better active trade. Another one I covered on that day was BBIO. This is BridgeBio. Now, this has also done well since then. Of course, this is the whole COVID mess right here. But since then, we've had a lot of sideways movement. You can see that there's a lot of support here at around 27. And once this took out these highs right here, we haven't quite gotten to the all-time high. But right now, this is a nice looking candle here. This actually closed up on Thursday almost 3%. This looks like it wants to go higher. Question, of course, is always going to be risk. But nonetheless, this might be another fun trade to look at from an active standpoint. Look at your real motion here. It's just gone crazy. It's also well above the SPY performance and the volume. So what you really want to do here is to take a much tighter risk and maybe to the lows of today, which I can tell you very quickly, the low was 36.98. So maybe you want to risk to just under 37 if it can get through this 38.50 level and see if you can't get up to the all-time high, which looks to me here was like closer to 50. Okay, now let's move on to BNR, another new issue. And BNR, again, not enough data to really have much information as far as moving averages, but we can see it's under the 50 and over the 10. This is outperforming the SPY, interestingly enough, and not doing so badly in terms of volume. So you know what I would ordinarily say at this particular point is that what you want to see is you want to see some kind of a phase change. So this is something you could keep in the back burner and say if we can get two closes over that 50-day moving average, this could wind up being a good opportunity because I like this huge correction it had down here. And then on a day when the market was down, this actually closed pretty well. So now I'm looking to see maybe once we can get through this 2360 a couple of days, perhaps that can actually give us some more. It was a new issue that reached a high of about 32.50, so it has room. And that's always what you want to assess as a trader is what's my risk versus my reward, or what they say is look left to look right. This is really what I'm all about, is finding these trades and then deciding which time frame I want to do it so I can get the best risk reward. Now this is another one I know I covered. This is PCVX. This also doesn't have a lot of information. That's why they're all new issues. It's above the 50-day moving average. What was interesting is it broke it. It had an inside day, a second inside day. So even though it closed under the 50 these days, the slope on that 50 was positive. This would have been a good actual trade to get into on this particular day. But now here we are up here close to the all-time high of its new issue. So again, what you want to look at this now is to see what happens here around this 50 level. If it can get back over 50, perhaps it can at least get as far as the high and then not possibly make new highs. And you might want to take a look and see what some of these companies are doing to merit this type of move. But again, outperforming the SPY, and look at this volume. So definitely somebody's been coming in here and buying this. This thing has totally exploded. Now another one, we actually traded this one, and it was very choppy. And that is Red Hill Biopharma. And this was also one I know I covered. And look at this giant sideways action that we've had here, sitting on the 200, finally clears over the 50, tests it, come back, test, and that's why I'm saying it was choppy. But this was the good buy area right here. Once it closed below, and then the next day not only held the 50, but cleared the 10. And I'm telling you this not because I'm saying, oh, it's too late, but I want you to understand these patterns that I look at. But what does interest me now is it's over 10. So if it holds 10, we don't know where this can go. Now, what's interesting is, even though it's outperforming the SPY, that's come down a little, and real motion after peaking out has turned down a little bit. So you definitely want to see what happens over the next couple of days if it can actually consolidate at these levels. And the last new issue I'm going to tell you about that I also talked about months ago was Sangamo Therapeutics. And this one also had an interesting situation in that it held the 200 and then rallied, right? Made a new all-time high and has come off since then. So this is a little toppy right here. However, it is holding the 10-day moving average. That gives you kind of a clean place, 1039. And real motion is under the 50 here, as is price, so there's no divergence. So if you get a clipper closes over 1103 or over the 50-day moving average, this could be another one in the biotech space to consider with a good stop under 1039. And hopefully you want to see also some volume coming in and the real motion to clear the 50. Also, by the way, outperforming the SPY. And the reason why I'm going through all of this is because I do believe that the biotech space is still a really good potential space to make some decent money as we get through the rest of 2020, unless, of course, the whole market crashes. But if the market holds up, this is really where I'm looking at now myself. Now, let's go into some of the oldies but goodies, I like to say. Some of the older stocks, like Amgen. Now, Amgen also hasn't really done very much until more recently. And again, real motion is showing a divergence. So this is below the moving averages while this is sitting above them. So that probably would give me pause on getting into this. However, I wanted to show you Amgen because this would actually potentially be a short. And I don't often talk to you about shorts, but this would actually be a potential short considering it's under the 50. If it confirms under the 50, you would have a good risk to about 250, a little bit higher using these highs. And the reason why I'm saying that is regardless of what the market does, this could be a good short, even though it closed up on Thursday because of this divergence in the real motion. Where would I short this? It would have to be a second close underneath that 50-day moving average. So that's another thing to look at, just for comparison. I like the newer issues for the buys, and so far, showing you this with Biogen too, another oldie but goodie. Amgen and Biogen look just the opposite. They look weak. And so this actually broke down, had this one big rally here, and then boom. Now, it did have what we call a reversal bottom in that this made a new 60-day low right here, had an inside day and then popped up. So really, where would I look at this now? I wouldn't touch this unless it breaks this low right here. And I can give you that low. That low right there is at 265. So if it breaks another $10 lower from here, then you can say, I think this stock is done. Same kind of divergence, by the way, showing negative in real motion. However, on the flip side, if this can get back through the 50, I don't know if I'd necessarily find this to be my first choice, but I would certainly be looking to see what happens if it clears back over the 50-day moving average. And I like to show these old stocks because people like to watch these things, and yet they don't really reflect what's going on in the market right now. That Amgen and Biogen look like they're in their own universe. And you're going to see with this one too, Regeneron is another one. These people have made huge amount of money in Regeneron through the years because it went straight up until this year. So what does that tell you? They're not really doing much in terms of the R&D. They're getting hit more with the cyclical problems in the market as opposed to the non-cyclicals. And this not only broke down under the 50, but now it broke down under the 10. Again, though, had the same kind of reversal pattern. So with Regeneron, and I'm giving you a bunch of big stocks to possibly go short, with Regeneron, you probably don't want to look at going short this unless it breaks 540. And that would not be a bad move down to the 200-day moving average. So this would be one to look at from the short side. Where would I be interested more on the long side? Well, it would have to do a lot more for me on this real motion to even make me consider it. So again, you've got some shorts and you some longs to look at. Now, Alexon is another older drug company that looks a little bit different. Look at this. This actually now had the golden cross back here, tested under the moving averages here. In August, as the market was going up, this started to play some catch up. Tried to get up to the highs that we had here in May, couldn't do it, has sold off since then. But look at your real motion indicator. Even though the momentum is coming off, it's still showing pretty strong. And it's still outperforming here, the SPY. So what I would look for on this one is, first of all, for it to hold around 110, 111. That's your 10-day moving average. And then if we can get back up over here, let's say these levels at 116, especially on a closing basis, that might be an interesting look at with a risk to under that 111. So Alexion looks different than its other stocks in that sector, in the old school sector. Sarepta Therapeutics, also looking like it's trying to find a base. This was a hot stock also for a while. Look at this big move it made and came off with the market. But now that it's already tested the 200 and come back, we have to look at the real motion here. It hasn't come back here yet, so it may not be ready. But on the other hand, if it can hold around 135 and clear maybe back over 150, we can always have a look at this on StockCharts to see whether or not, or you can ask me on Twitter, whether or not this is actually cleared back over in the real motion to show a lack of divergence, which of course right now it still has. And now let's move on to Gilead, talk about an old stock. Now, this has had lots of controversy around this particular company. And so with Gilead right now, they came out and said that they had some vaccine hopes, then it was denied and the trials didn't work, etc. And so this again could be setting up as a short. Even though it's already broken down, we could still have more on the downside with this, because if you look back here, I mean, this stock was trading a lot lower. And when you're trading something that's trading $60, $70, if you make $20, $30, it's all about your risk, right? So right now here it's looking at sitting right on the 10-day moving average at 65, let's call it. If it breaks down under 65 and say under this low from the other day, it had this big candle, then you might be able to go short this stock, see where it goes, and get out if it closes back over 65. So we've got lots of shorts here to look at. And that's really kind of selling. By the way, you can go short even when the market's going up. I've made a lot of money going short some of these biotech stocks that are breaking down in a good market. And I'm going to get to one in particular as we move on. And actually right now, which is Mylan Labs. So Mylan Labs, we caught a short in this. This was back in last year, or maybe 2 years ago, 2018. We caught this great short. It wasn't this one because we didn't go short this year. But nonetheless, here we are possibly flipping. So this is just the opposite. Everything I showed you, Amgen, Biogen, Regeneron, Alexion, Sarepta, maybe take that one out, but Gilead, potential shorts. This, which already got hammered, could actually wind up now being a good long. And I'm watching this very carefully. Why? Number one is look at this, a positive divergence. in real motion. I like that. So what do we do when we have that type of situation? And also, by the way, outperforming the SPY and doing well, gotten some volume in the last couple of days. We watch now for a confirmation of a phase change, which means it would have to go back into a recovery or recuperation phase, which means 2 closes over 1618 or the 50-day moving average. Now, I happen to know there's a weekly moving average. That's why I'm watching this. I'm actually potentially recommending this as a buy either tomorrow, Friday or Monday with the second close, so it'll probably be Monday. There's also a nice weekly moving average there that if that clears, which is around the 1615, 1620 level, gives you a pretty good risk if you want to use down to like 1550 and see if you can get a move up closer to the 200-day moving average. And now another one that actually has just exploded, and sometimes I wish I had octopus arms to be able to watch all this stuff, but this is Cura Oncology. And so look at this. This is cancer research right here. This thing just, since I spoke to you, exploded. And now I don't know if I would necessarily be looking to buy up here, but I don't see any reason why it should be selling off. 27 is going to be a rock bottom risk point. And of course, if you can get here through what looks like 30, who knows? We're in uncharted territory. So again, this would be something to look at for a buy. So we really mixed it up. Okay, so for the last 3 I want to show you here, I want to show you ones that are what I call the vaccine hopefuls. So let's start with this one, which has been in the news a lot lately, and this is AstraZeneca, AZN. So you recall they came out and said, oh, we're working on a trial vaccine, it's going to be ready. And then, of course, it turned out that the vaccine caused harm, number one. And number two is they were wondering about distribution. Then they were told by the FDA to stop. Then they were told that they can go ahead and continue. So looking at all that fundamentals aside and just looking at the technicals, it is still underneath showing a divergence on the real motion in that it's underneath the 50 and sitting right on the 200. Here it's well over the 200, but sitting right over the 50. So what this tells you is it's probably not a great play right here, but if you start to see this move up in the real motion a little bit, or you start to see this price really hold and start clearing above that 50-day moving average, or even better, if you start to see the 10-day moving average sloping back up, which shows you that the near-term momentum is starting to actually move up. That's how I use the 10, by the way. I use it in several ways, but the way we're going to talk about right now is if something breaks down under the 10, that's one thing, especially if we start to see divergence here, like let's say if you were long. If it breaks back over the 10, I like it. But if the 10 is below the 50, I like to at least see the slope turn up and ideally turn back over the 50-day moving average. So that's number one. Next is the other one that's in the news all the time, and that's Moderna. Now, we haven't really heard much about this lately, but nonetheless, let's go right to real motion. Another divergence. So these things are sitting here stagnant. I've given you a lot better trades with those new issue ones to look at and a couple of shorts. I wouldn't buy this and I wouldn't sell this here, but I would keep an eye on it because one day of news, this thing can go blasting off. So it's sitting right underneath that 50-day moving average. And even though the real motion is negative, it's holding at least the Bollinger Band. So once again, the classic move here would be a wait for 2 closes above that 50-day moving average. And then the last one is Pfizer. So Pfizer, let's immediately look down here at the real motion, is above the 200, just like it is here, and below the 50, just like it is here. So there's no divergence. I like that. And it's starting to show that it's got some momentum against the SPY, even though the volume's been kind of, yeah. So if it holds 36.42, remember I was telling you about that 10-day moving average? I would only be interested in this now if it can get back over 37.50 with 2 closes. We see the 10 moving up, and we see the real motion moving up. But nonetheless, Pfizer could be an interesting play as they are really big and hot right now as one of the vaccine hopefuls. So to sum everything up, XBI looks better than IBB, probably because in its basket it has some of these hotter stocks we just covered. However, both look potential. Market stays strong. I think BioTech is still a really good place to go. It was sort of like a foreshadowing with the new high it made in 2020, and that came down to retest where it broke out from. You've got a couple of those new issues that I shared with you that look particularly interesting to me from the long side. A couple I may stay away from. And then in the old school ones, they could actually be setting up for shorts, especially if the market can't hold here. But even if it does hold, you could still be looking at these for shorts because they're sort of like yesterday's news. And then finally, with these, except for Mylan, by the way, that's my one hot pick from the old school biotech stocks. And finally, looking at the vaccine hopefuls, Moderna and AstraZeneca, kind of choppy, showing divergence, but Pfizer to me looking potentially as the most interesting if we can clear that 3750. Okay, I hope this was helpful. I love your feedback on YouTube. I answer everybody, so please feel free to ask questions or make comments, and I'll see you all again next week. Thanks so much for watching. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.